Shares of AMD plunging today after reporting earnings results that disappointed investors. Data center revenue coming in weaker than expected, but not all bad news, as NVIDIA gaining off the back of increased AI spend announced by Alphabet. Joining us now on what's next for the AI trade, we've got Ruben Roy, Stifel's applied technology analyst. Ruben, great to have you on. Help me square this here. We've got slowing revenue, data center revenue growth from AMD, and then we've got NVIDIA recovering today after weeks of pressure. What's going on here when it comes to the AI trade?
Well, thanks for having me, and good morning. I think the AI trade is going to be, from here, maybe a little bit volatile, maybe a little bit lumpy. What we're seeing with AMD, I think, is company specific, and I think it's near term. And we can talk about the reasons for our view on AMD in a second. But I think in aggregate, following last week's shock in the AI trade with all of the DeepSeek news, I think one of the themes that's coming out of earnings season so far is that hyperscaler CapEx here in the United States is going up. Meta talked about $60 to $65 billion. Microsoft has been talking about $80 billion. And last night, as you mentioned, Google now talking about $75 billion in CapEx. I think consensus estimates were looking for more in the low $60 billion range. So hyperscaler spending on AI infrastructure is continuing to move up and to the right. And we think there will be a number of beneficiaries as that long-tailed investment cycle continues. And certainly AMD is one of those beneficiaries in our view. NVIDIA, which we like a lot as well, it remains sort of our top way to play AI infrastructure compute, is very well positioned this year as they are on the verge of ramping their Blackwell platform. So a lot of moving parts, but we can dig into it further.
I guess, Ruben, then just given your stance on what you said just a moment ago on AMD, then what is it that's handicapping that upside, at least in the short term?
Yeah, so a few things. As you mentioned, data center revenues came in a little bit light relative to consensus expectations for Q4. That was a little bit surprising. The company did beat by a very modest amount, and that beat, wasn't, it was driven by client. And, that's not what investors want to see. Want to see continued momentum with AI, again, given all of the data points around infrastructure spending moving up and to the right. So that's number one. Number two, and probably more importantly, is that the company said that their data center segment revenue would look very similar in the first half of this year to the back half of 2024. And that implies sort of a flat MI300 or AI GPU compute revenue run rate, if you will, for the first half of 2025. Again, where's the acceleration if all of the hyperscale CapEx is ramping up to the right? And so, for AMD, like I said, I think it's company specific for now. AMD has a platform that went from essentially zero revenues in 2023 to a little over $5 billion in 2024. I think that's a success story in and of itself. But they do have follow-on technology coming. They've got something called MI325, 325X starting to launch now. And then probably more importantly, on the call last night, management talked about pulling in their next generation infrastructure technology system based on MI350X to the middle of this year. Previously, the company had said back half of or second half of 2025. And so, with those transitions coming, there's probably a little bit of pause with some existing customers, some new customers that are waiting for the new technology. And the company has said that they believe that the second half ramp is going to be quite strong. In fact, AMD management continues to think that they'll have tens of billions of dollars of AI-related GPU revenue over the next several years. So, we've seen a lot of engagements with the leading hyperscalers. We don't think this is a competitive issue. We think it's a timing issue. And we do think that, given where the stock's trading, especially with a little bit of a sell-off today, as you mentioned, downside risk from here seems limited to us. Our numbers came down a bit, but the stock looks pretty cheap.
Since you mentioned the other hyperscalers, I'm curious about the impact of DeepSeek. If we did not have DeepSeek announcing that they were able to train AI for far less money, do you think that the street would be as disappointed in the increased CapEx on AI from the likes of those hyperscalers?
I think it's going to add some volatility because I think there's a lot of confusion in what DeepSeek actually did. Whether or not they trained full-fledged model that looks similar to some of the large LLMs here in the United States. For the amount of money that they've said, is up for debate. We think that there was a lot of investment into the model and other, things that the company did over in China to get to where they are today. But having said that, the big takeaway for us is that AI is getting more efficient. Large language models are going to get more efficient. But as that happens, we think that the demand for AI is going to move up and move higher. And so what that means is there will be more compute demand. We haven't even started, in our view, to see real inference workload, rollouts in enterprise, broader enterprise, and government use cases. And that's a long-tailed investment cycle that we think is going to drive a lot of compute demand. So I think we're going to have a little bit of volatility around the debate as what the DeepSeek really means, over the next several months. But I think, again, as you look at the CapEx numbers that are coming out, we're going to have NVIDIA report at the end of the month, and we'll have a lot of other ecosystem companies reporting like Broadcom, Marvell, and others. I think this will all work out as we flow through 2025. We're still big bulls for the AI trade.
Ruben, putting NVIDIA aside for a second, putting AMD aside for a second, just given what you said about DeepSeek and maybe the fact that it could be a catalyst here and likely will be a catalyst, more broadly speaking, for that AI trade, what are some of those underrated names within your coverage that you see ultimately getting a huge boost from this in the long run?
I think investors should be looking at networking stocks, whether or not, we're moving, further out to the edge, and we'll have, the ability to do more AI-related workloads on our edge devices, smartphones or PCs, notebook computers, et cetera. The network, the underlying plumbing for moving data is going to get more challenging to put into place. The interface speeds are moving higher, and the challenges of moving data around, can continue to get, more complex. In the meantime, there's a smaller handful of companies that are participating these days. There's been a lot of consolidation in the networking space. So on our list, we really like companies like Coherent and Lumentum, which are reporting this week. Ciena, which has traditionally been selling optical networking gear into telecom service providers, is now starting to see a lot more demand from hyperscalers as AI-related data bleeds out of the data centers and out into, the enterprises and consumers that are consuming AI. And then we picked up coverage of a company, which is an EMS company, which builds switches and servers for hyperscalers. We just picked them up earlier this week, called Celestica, ticker CLS. And that's another one that we believe is going to be a very big beneficiary as we move into either custom compute, so the custom chips that the hyperscalers are designing and developing, and then companies like Celestica will put those chips into systems or rack-based systems, or they're also doing switch devices, which are part of this networking theme that I just discussed. And so, networking, I think, is something, an area that absolutely will benefit as AI workloads get more efficient to run.
All right, Ruben Roy, always great to get your insight. Thanks so much for taking the time.
Thanks for having me.